Okay, sometimes you are given your dividends that you paid, and if that's the case, you can just take your number. Sometimes you're told how much dividends had been declared during the period, and then you just need to take into account any change in your dividends payable, and that will be your number. And sometimes, as in the case that I'm going to show you now, we calculate it just from having a balance sheet and an income statement. So let me show you how you can do that. You know that retained earnings is part of your stockholders' equity. Stockholders' equity is broken down into paid-in capital and retained earnings. Paid-in capital is everything that you got from your stock transactions, and retained earnings is your earnings that you retained in the company minus any dividends. You can also say minus any distributions. So here we have $780,000 was our beginning number. We get it from right here. And then we add net income to retained earnings because we're accumulating our earnings here. And then we are told that our ending is $1,500,000. So we need to solve for X, and X is where we reduce retained earnings for dividends. So the way that we solve is we put in beginning retained earnings, 780, plus net income, subtract out the ending, and that will get you to your dividends declared. Now at this point what we've got to do is look and see whether or not we actually paid out everything that we declared. So we declared $180,000. Let's look to our dividends payable account to see what happened. It went from 75 up to 85, which means that we still owe 10,000 more, so we have not yet paid that. So out of our declared, we haven't paid 10,000 of it, so we will reduce the amount that we paid by that amount. Had it gone the other way and we actually our dividends payable went down, then we would have added it to it because we would have paid more than what we showed originally. So $170,000 is the amount that you will reduce in your financing section for these dividends.